Welcome back, dear traders. The US stock market traded roughly flat on a Monday. Today, many risks have resurfaced. Traders detected alarming signs on macroeconomic data and in remarks from policymakers. Wall Street is overwhelmed by the doom and gloom, and the market sentiment is shaped on the back of a rebound in the US manufacturing sector, a default threat in the United States, and the corporate reports. Today, there is a lull before the storm and the Fed's policy meeting. Wall Street traded sluggishly on a Monday. The VIX index went down to lows. The benchmark stock indexes closed almost flat. The Dow Jones shed 46 points. The Nasdaq slipped by 0.11% intraday, and the S&P 500 edged down by 0.01% to close at 4,176 points. The major indexes traded mixed with the muted dynamics in the New York pre-market. JOLTs job openings report and the batch of fresh corporate records could set the sluggish market in motion. The S&P is expected to trade in the intraday corridor between 4,120 and 4,190 points. Yesterday, investors absorbed the purchase deal on the First Republic's assets. The Fed's policy meeting is at the center stage this week. The regional bank index sank by 2.7%. JP Morgan shares grew by 2.1% following the purchase deal on the purchase of First Republic's assets. JP Morgan Chase will pay $10.6 billion to the Federal Deposit Insurance Corporation to acquire the deposits of the Alliant Bank. Investors also digested the red-hot macroeconomic data, which indicated that the US Fed would have to stick to its monetary tightening in the near future. The ISM manufacturing PMI rose in April from a month ago. Despite staying below the threshold level of 50 points, the PMI grew to 47.1 in April from 46.3 in March, stronger than the consensus for 46.7. The index has not been trapped below 50 for such a long time since the financial crisis of 2008. On the corporate front, the energy sector slipped by 1.3% on the back of a fall in oil prices. The high-tech sector inched up by 0.2% yesterday. The stock indexes extended their decline today as the market was started by the rate hike by the Reserve Bank of Australia. The fears are worsened by uncertain talks on the ceiling of the US Treasury debt. Concern over an economic slowdown and the bank jitters cemented the hope for rate cuts in the second half of the year. However, the fact that the Australian Central Bank confirmed its commitment to fighting against inflation by rate hikes dampened the hope. The US Rate Setting Committee will complete its meeting on a Wednesday. A rate hike by 25 basis points has been already priced in. Bearing in mind that inflation remains way above the 2% target level and the labor market is robust, there is a slim chance of a rate cut in the near future. Apart from further rate hikes, investors are unnerved because of the unsettled issue about the public debt ceiling and a looming default. This pose could cripple the global economy. US President Joe Biden is solving this issue with a 4 high-ranking Congress lawmakers because the Treasury Department had warned that the government could run out of cash to pay its bills. Janet Yellen informed the Congress that the Treasury Department would hardly fulfill its budget obligations by June 1 unless Congress takes action. There is a grave risk that the US is likely to default on its debt. Such prospects assures Joe Biden to call on the political leaders for a meeting on May 9. Top American companies unveiled plans for massive job cuts. Morgan Stanley is going to fire about 3,000 employees in the second quarter. And this move will be made because revenues of the investment and the banking divisions went down in the first quarter. As a result, the overall income shrank by 2% to $14.5 billion. IBM plans to suspend new employment because almost 7,800 jobs could be replaced by artificial intelligence, the CEO told Bloomberg News. He added that the company would hold employment for back office functions such as human resources. 30% of jobs not dealing with the clients could be replaced in 5 years. Tesla shares rose by 0.2% after the news on increasing price tags in Canada, China, Japan, and the United States. The market cheered the news after the series of huge discounts on the key models, but investors lost optimism in the early trading hours. More corporate reports, including ones by Pfizer, Uber, Starbucks, and AMB, will be on tap later. The manufacturing PMI on Monday confirmed the likelihood of a further monetary tightening. Thus, investors will be alerted to the JOLTs, job openings, and factory orders tonight. The currency market was also trading quietly, but it perked up in the New York pre-market. The US dollar index climbed by 0.16% to trade at 102.30. The intraday Canada for the instrument is seen between 101.70 and 102.5. The Australian dollar hooked the limelight today. It spiked by more than 1% against its American rival because the Reserve Bank of Australia made an unexpected decision to raise the key interest rate to 3.85% and said that further tightening could be required to push inflation down to the target level in a reasonable term. The Federal Reserve will rule the market sentiment on a Wednesday. The dollar's optimism is under question until then. The US Central Bank has to strike a balance between weak signs of waning inflationary pressure and upbeat economic data. Besides, the public debt ceiling and the recent bank crisis could ensure that Fed's policymakers to revise their hawkish rhetoric. The US dollar could find support from the data on vacancies for March. What about the Canadian dollar? It's losing ground today, having climbed by 0.43%. The USD CAD pair is trading at around 1.36. The instrument is likely to trade in the intraday Canada between 1.3520 and 1.3590. The loonie is again testing the lows of April because a fall in oil prices is bearish for it. Oil prices extending losses for the second day straight due to downbeat data from China. The manufacturing sector suddenly declined in April, according to the government report. It's the first contraction since December. Oil prices are under pressure ahead of the Fed's policy update, and these factors outlined the positive data on a growing energy demand during the holiday season in May. Both benchmark rates lost more than $1 on a Monday and accelerated their decline in the New York pre-market. Brent crude decreased by 2.2% to trade at $77.5 a barrel, and WTI skidded by 2.1%. The crypto market is on exception. It's trading flat for most of the day after volatile session on Monday. Bitcoin settled at about 28,000, 1.2% up from yesterday's closing price. Popular altcoins are trading mixed sideways. Ethereum, Solana, Ripple, and Litecoin are wavering between 1.2% dips and 1.3% gains. The crypto market has also come to a standstill ahead of the Fed's policy decision. Today, cryptocurrencies are trying to recover after yesterday's losses. Analysts suggest a different forecast. Some of them predict a trend reversal. Others are cautious, predicting a lower fall. Candlestick patterns indicate the overall bearish sentiment. The RSI and MACD signal a decline in Bitcoin's value. As for the intraday outlook, Bitcoin found support at about 27,750, and the token could trade with a narrow range from $27,900 to $28,100 If one of the borders is broken, the price could either go down to 27,400 or climb to $28,600. That's all for today. We keep monitoring the financial market situation. Subscribe to our channel and make profits with the InstaForex, and see you online tomorrow.